Hey guys, my name is Matthew Spazziti here at New Millennium Wealth, and welcome for another episode of my weekly market analysis. So, I have to be completely honest with you guys. I didn't really think that we were going to find much in the way of opportunity this week. I came into the market on Monday and I was looking around, and yeah, I saw some potential opportunities, but I didn't really see a lot, so I wasn't really thinking I was going to find anything, but thankfully today I was able to find stuff. So, but before we head into that, guys, if you haven't been to the website, newmillenniumwealth.com, please go ahead and check it out, guys. Hit that get started button. If you want to be one of the first people to get notified of any kind of content that I'm pumping out, any kind of blogs, any kind of YouTube videos that I'm pumping out, go ahead and hit that get started button, and you will be the first to be informed of any kind of content that I pump out. On top of that, I'm also going to be sending you guys some information, some articles that I'm reading throughout my week that I find very interesting, whether it's about the market conditions, whether it's about trading, investing, just whatever. I'll also be sending you guys other articles that I find interesting as well. So guys, if you're interested in that, click on the button and do what the button says. Get started. So the two trades that we took today is the New Zealand yen and the dollar CAD. And so let's go ahead and look at the dollar CAD real quick. So this is an opportunity here that I found. I have to be completely honest. I actually got in on the fourth retest. We had the first retest right here, second, third, kind of around here, and then the fourth one. And I actually didn't think that this market was going to, after we broke above here, we broke above this wick, I legitimately thought that the market was just going to continue to rally and I had missed out on my opportunity. Thankfully, though, that was not the case. I actually was able to get involved. The market did come down here. We had a green, I don't know if you guys can see this. Let's move this over here. We had a nice big green wick candlestick here that basically is a very bullish indicator. We came down here and we retested this level and we got rejected. That's what that wick basically stands for. And we ended up rallying from there. But we were able to get involved here at 132.41.5. Just goes to show you guys that simply because the market doesn't initially hit your target, your entry point, and doesn't give you the ability to get involved, doesn't necessarily mean that you aren't going to be able to get involved at all. Sometimes you got to put your entry on there, put your stop loss on there, and just wait. So how I would have handled this in real life, as you guys know, I'm not a consistently profitable trader. This is simply just my analysis, me practicing my market analysis. And how I would typically handle this, if I was to trade this with real money, would be to ultimately place my entry order as a limit order, and then I would place a stop loss order, whether that's a buy stop or sell stop, depends on the direction in which you're trading. But ultimately, I would place those two orders on, and then I would basically just wait until my entry gets hit. If my entry were to get hit, then I would more or less look to place an order, a sell order or a buy order with regards to my target as well. But I wouldn't do that unless my entry was already hit, and we kind of go from there. And that's how I would probably handle this situation, in real life. So if the market had already kind of hit the entry more than once, and I was hoping it would hit again, I'd place my entry order, and then I'd place the stop order, and then I'd wait for the entry order to get hit, like it did here, and then I'd wait for it to come up and rally. Now, as you can see from the video, here, I'm re-recording this section because I realized that I started talking about something and I never actually finished what I was talking about. So I'm actually re-recording this several days later, and you can actually see here that the market kind of came up here, kind of had a little bit of a retracement, and then rallied again, broke above the highs right here, and then got rejected. Whether or not the market is going to continue to rally higher it remains to be seen. It does appear as though this is still going to be the case. As you can notice down here with the relative strength index, we do have an oversold condition, so there is possible that the market will rally and end up making new highs and hitting the target. There's also possible that we could have gotten this close to the target and then, continue to roll over. It's, anything can ultimately happen, guys. But that being said, we're going to go ahead and cut back to the original video that I posted, and you're going to notice that the market is going to basically go back to around this point, and you're not actually going to see the rest. But having said that, I kind of have a bit of an issue with regards to this. If you are going to be trading and you have a 20 currency pair portfolio, something large like this, I recommend that you only have 1 or 2 strategies that you're trading. Ultimately, the more strategies you have, the more things you're looking for, and you're going to miss a lot more on these currency pairs. Odds are you're better off cutting down to your most successful currency pairs, like maybe 5 or 9 pairs, something around those lines, so that you guys can catch the opportunities when they arise. So the more trading strategies you have, the better, it would be better off, or you would be better off keeping your portfolio reasonably sized. I would not at all have a very large portfolio like this. Now, if it turns out that I backtest this strategy on all of them and they all end up working out, then sure, I would probably have one strategy and I would watch all these currency pairs. I mean, as you guys have been able to see on my profile, I mean, I started this, what was it? On July 1st, I believe. Let's go ahead and go back and just double check. So I started this, I believe, July 1st. Yeah, I started this on July 1st. And look at all the opportunities. I have been able to acquire 35 different trading opportunities over the course of literally, a month, over a month now. So to be completely honest with you, that's pretty good. I don't know about you guys, but I really, really like that. I like having a lot of opportunities where I can come into the markets and basically trade the markets and stuff. I really like having those opportunities. Now, there is an issue with over trading that you always, always, always need to be concerned about, but there's always going to be some biasness with regards to your back testing or forward testing. You're always going to have a biases. You may not be as careful with your analysis. You may jump the gun a little too soon, or you might be a little too late. You may not be nearly as careful as you would be if real money was actually on the line. So something that you guys really should keep in mind, that even though backtesting and forward testing is definitely necessary when you're doing trading like this, it's not something that you would want to, your data is not going to be completely accurate like it would be if you simply were trading with real money. All right, so let's jump back into it. Like I said, dollar CAD, I really didn't think I was going to get involved here, but thankfully I was able to, and now it looks like the market's going to hit my target and give me profits, and doesn't look like it's going to have a problem. Right now, as you can see down here on the relative strength index, we are heavily overbought, so I do suspect that this is going to come down quite a bit. I hope it doesn't come down and stop me out, although that's totally possible. The market could totally do something like this and then continue lower and stop me out. That is absolutely a possibility. I mean, anything can happen in the markets, as you guys well know. However, we can have a massive overbought condition. The market could come down to 132.51s, and then the market could rally from there. You never really know, but we'll just have to. But we are involved in whatever happens, happens. We just gotta cross our fingers and hope for the best, right? So the next one, what was it? New Zealand yen. All right, New Zealand yen. Oh, I actually didn't have this one marked. So New Zealand yen, I actually didn't think was going to get up here either. This was another opportunity that I just was not expecting. I saw this kind of happen. We made a new lower low, lower close down here. We broke the structure level, this support level, and then this support level turned resistance right here. And we were kind of coming down here, and I thought, last time I saw it, we were right here, and I thought, yeah, I'm not going to get involved in this opportunity. However, that's not exactly what happened. The market found a support level here, bounced off of it, gave me a nice green wick here, as you can see, hit my entry level, and now we are effectively short. We are now short, and we are looking, and we're looking good. This is looking like it's going to go ahead and hit our target at 67.56.3. And yeah, this is looking very, very nice. So this was a very pleasant surprise, if you will. I really, really enjoyed this, and I like I said, when the market was all the way down here, I didn't think the market was going to give me an opportunity to get involved in this at all. But thankfully, that actually happened. And so you're probably kind of wondering what this orange line is up here for. This orange line is actually the 618 fib retracement level from this swing high up here, from this structure high to this structure low right here. It's a little lower. It was actually probably about here. Okay, so it's not exactly 100% exactly where it should be, but as you can see. But that's where that is. This is the 618 retracement level here. And I basically put that before I knew this was going to, give me my entry. I actually put that there thinking that that if the market came up, I would go ahead and get short here. Because this is the overlying start of the extension lower. This is where the leg really started from. So that's what that is. Now that I'm seeing this happen, I really don't think that that's ever going to occur. However, as you know, anything could happen. And another reason that this actually was valid for me was because the market came down here and it did not close below this wick. If the market had closed below this wick, then I probably would not have maintained this, or I never would have been able to get involved in this. I would have had to have measured probably more from here to somewhere wherever lower down here where the market made a new lower low lower close. But luckily, we came down here, we retested, we found support, and we bounced off. So good deal. So we had two awesome trading opportunities here. And yeah, I'm actually very happy about it. Hopefully we'll continue on and we'll end up having 2 successful trades. All right, now let's talk about what is causing the market so much trouble today. Particularly if you guys are involved, if you have any investments, if you're involved in the stock market at all, you're probably wondering why the market is going down. It doesn't make any sense, what's really happening, and you're probably maybe pulling your hair out a little bit. Look, all in all, it's not bad for you guys to be in the market, but try not to overexpose yourself with regards to your position in the market. I actually made this mistake of being overexposed in the past when ultimately I invested in a penny stock that didn't have a lot of volume in it. And one of the mistakes that I made was that I had effectively gotten kind of greedy with it, and I put around $700 into this very, very tiny, rarely traded penny stock. And unfortunately, greed had clouded my judgment, and I wasn't really thinking straight, and I was thinking only of the money that I could make. I knew that this was kind of a long shot. I mean, I certainly did not believe that the market was going to, spike and make me massive amount of money, but the very idea that it could do that was something that really enticed me. So I decided to take a position. The penny stock was only about 8 cents, and I ended up taking a position of around $700. What ended up happening was that I ended up losing about $170 after holding this penny stock for several months, probably 3-4 months, something around those lines. And I realized that it may not have necessarily been a bad thing that I went ahead and invested in the stock, but one of the worst parts about it was that I just overexposed myself. Even the slightest move in this penny stock ended up losing me hundreds of dollars. And it wasn't a pleasant experience. The market for this penny stock didn't really move very often. I mean, on a day-to-day basis, I'd come in and see absolutely no movement whatsoever. And within 1 week, it was not uncommon to not see this stock move whatsoever. So just kind of a word of the wise, be very, very careful about any kind of stock that you're getting into, particularly if it's a penny stock. Make sure that there is a very high volume. Make sure that you have enough volume to where if you need to liquidate the position, you can. My situation was I was actually able to liquidate the position, but I had to do it at a loss, and the market wasn't actually going up or going down or anything of the sort. So unfortunately, just moral of the story is make sure that you are not overexposing yourself. Just because you can buy 7,000 shares in a penny stock like I did doesn't mean that you should. In hindsight, I probably should have only put $20, $50, maybe $100 into the stock. I probably never should have put as much money as I did back then. But, I didn't really think about it at the time, and it was an unfortunate situation, but yeah, it happened. So, but yeah, it happened in my past, and it's now a great learning experience that I can talk to you guys about and share with you what I did back then, and you guys can hopefully learn from my mistake and not make the same mistake that I made. So ultimately, I want you guys to know, make sure you're managing your risk. Make sure you're not overexposing yourself. And one of the best ways to manage your risk is a strategy called money management. Okay, now it may sound silly, it may not sound all that complicated, and in reality it's not. Largely what money management is with regards to your trading is it's a strategy that you utilize, typically a formula that prevents you from increasing your position size in any particular trade too much or too little. So as you win more trades, you increase your position size by a certain amount. As you lose more trades, you decrease your position size. And ultimately what this money management strategy is attempting to do is it's trying to predict when you are going through a drawdown and when you are going through an uptrend in your equity curve with regards to how much money you have in your trading account. And as you win more and more and more, it'll increase the position size. As you lose more and more, you will decrease your position size. Because ultimately, money management is what's going to make your strategy exceptionally profitable. You know, if you simply just trade a particular currency pair and you only trade one share or two shares or whatever, you know, it's really not going to benefit you that much. But when you're utilizing money management, in my opinion, smooth ratio money management, you are effectively going to be able to grow your account at a much faster rate than what you would otherwise. So money management is not only a way for you to manage your risk, it is also an excellent way for you to grow your account and exponentially increase the growth of any kind of strategy. The strategy is just one very small piece of the puzzle. It's a very important piece, don't get me wrong, but in the grand scheme of things, money management is actually, in my opinion, a much larger piece of the puzzle that's more important if you ever intend on growing your account. So make sure, guys, in your trading, again, you're not overexposing yourself. Make sure that you're managing your risk appropriately. Make sure that your strategies are not overly aggressive with very large stop losses. Make sure that you're not taking trades where you stand to lose more money than you stand to gain. And if you are going to do that, make sure that that strategy wins more often. And ultimately, that you need to do your back testing. Guys, again, learn from my experience. I've traded stuff before in the past, just like that penny stock, and I had absolutely no trading plan. I had no back testing to back up why I did it. I just did it. It was not correct. It was not right for me to do it, and I ended up losing $170. I know a lot of people that lost a lot more than me doing very similar things. And I'm going to be completely honest with you. I got off easy. $170? Yeah, a lot of guys. There are some people that I know that lost thousands of dollars. So in reality, guys, this is your money. Don't waste it. Don't trade a strategy where you don't know the consistency and you don't know the accuracy of that strategy. Make sure that you are constantly testing the strategies that you're trading over historical data and then forward testing them over live data to get to see the difference between the biasness that you may have had in your backtesting. Make sure you're not overexposing yourself and make sure you're just managing your risk. Have a stop loss. Make sure that your stop loss is not too far away to where you're taking too much risk, but also not too close to where you are not risking enough and you're losing more often. It's really a give and take in trading. So that being said, guys, I hope you like these videos. I hope you're really enjoying the content that I'm producing. And if you are, please go to the website and hit the Get Started button. It'll take you to the contact page where you can fill out your information. And ultimately, you'll be the first to be informed of any kind of content that I produce. And you will also be the first to receive any kind of things, articles that I'm reading that I think are important that you need to know about because they will affect your financial freedom and they may even affect your investments and things of that nature. So, if you like what I'm doing here, click that Get Started button and stay in the loop. Alright guys, well if you like this video, please make sure to like the video, subscribe to the channel, and like I said, don't forget to check out the website at newmillenniumwealth.com. So if you guys will do that for me, I'll see you in the next one. Remember, know the risks, plan accordingly, and have a great day.